All right. Thank you everyone for attending this month's market update webinar for the month of March 2026. Let's start with some fun disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and unless otherwise stated are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything within the presentation. And of course, past performance is not a guarantee of future results. You can learn more about our disclosures on our website, and throughout the webinar, you can use the Q&A button at the bottom to ask any questions, and we'll address them at the end. All right, quick summary about us. Silverstone Financial, the firm, is a fee-only fiduciary independent wealth management firm. We provide financial planning, investment management, tax preparation, estate planning services. You can learn more about us on our website. And I'm Jeremy Eppley, joined here by my business partner, Gordon Achtermann. We're both financial planners. I specialize in inheritance optimization, gift and estate planning, and Gordon specializes in retirement planning and value-aligned investing. We can hop right into the market for the past month. So we have a lot of movement that was caused by a number of headlines that we'll get to at the end of the presentation. But bottom line, we saw move away from large caps and mega caps into small cap companies, so smaller companies, and international companies. We saw the S&P top 50 largest companies fall 3%. A lot of that was due to, we saw AMD, Amazon, Google, these three fall double digits. The S&P 500 as a whole fell 0.8%. One reason that we show this heat map, which the larger the box, the larger the company, and the redder, the worse the performance, the greener, the better the performance, is because how indexes, when you just see, oh, the S&P 500 fell 0.8%, that doesn't really tell the whole story. You can see that a huge swath of the market, the industrials, real estate, utilities, basic materials, energy, the telecom services, consumer defensive, and healthcare, all performed actually admirably, quite well. It was just the mega cap names that have dominated the market cap based indexes like the S&P 500 have just dwarfed what the index actually returns. When you see Google and Amazon falling, it makes the S&P 500 as a whole fall, even if the large part of the market did very well. S&P GARP is an investment style that we like quite a bit. It's growth at a reasonable price. It has a little bit more of a broad investment holding instead of just a few mega cap names. So that performs slightly better at gaining 0.3%. And then we see small caps up 2.1%, which again was the reversal of the mega cap trades that we've seen outperform year after year. Global ex-US, we've spoken about quite a bit in past years, where we shifted our client portfolios to be more international, to have more international holdings after the new administration came in last year and was having some policies that made us worry about the competitiveness of the US on the world stage. And we see that paying off quite a bit this year, or well, this month at least, for global ex-US up 5% in a single month. That's a quite a huge jump. We saw aggregate bonds up 1.5% for the month. That is a pretty big move for bonds. Usually, bond movement total return is less than 1% for a single month. This would be on par with, what would that be? That'd be 18% for the year if it was annualized and continued all year. So that, of course, is unlikely to sustain. but definitely a big move for this month. Gold up 10%. It's a big move, but not that shocking. We've seen gold be very volatile and very popular for the past few months. Crude oil, of course, that statistic comes before a lot of the volatility in the Middle East, which we'll get to. This ends February 28th, these numbers. So crude oil up only 3%. I think it is up quite a bit more since then, maybe 8 or 10% since then. So definitely a big jump. And then Bitcoin, a very interesting one, being down 22% for the month, not following gold. It has decoupled from gold, decoupled from a lot of some of the what is correlated to. That seems to be following mega cap tech as a risk on trade. So it was being sold to try to get off that risk, that high risk. Anything that you're seeing on this map, Gordon?
Um, yeah, it's interesting. Just I don't think there's any exception here except for TSM of the really big companies that are and that's who is that? That's one of the
It's Taiwan
uh,
Semiconductor, so
oh
that
right.
would be an
Yeah.
international company, which is probably
Yep.
one of the big reasons it bucked the rest of the trends.
hmm Um, so all of the US giant companies down this month. And we saw global up 5%, emerging markets just separately, and this is as of close today, we're up 6.78% for the year. So, like we saw in the second half of last year, emerging markets a little bit hotter even than the rest of the outside the US.
Yeah. Talking year-to-date performance, I won't go as in-depth since this is only 2 months, and this very much follows the trend that we spoke on the last slide. We saw Bitcoin down 25% for the year, crude oil up 16% for the year, and a lot of that has come just in the last few days due to the conflict in the Middle East. Gold up 20% for the year, aggregate bonds up 2% for the year. Global XUS up 11% in just 2 months. So that's quite a big jump. Another one there is small caps up 8% in just 2 months. And we see the S&P top 50 down almost 4% in just 2 months. So definitely movement and moving away from these mega cap tech names and into other assets that are maybe more diversifying. All right, so we have the graph of the month that Gordon has picked for us.
Yeah, so I found this really interesting, and for those of you who get our notes along the path emails, I had a little bit on this, but I just wanted to make sure everybody saw this, that the um, pre Supreme Court decision, we had a trade weighted at applied tariff rate. So what that means is um, you weight the tariff percentage by how much of the economy this is that that particular good or service represents. So before any of these tariffs, we look back to like 2022, 1.5%. It had been very low for a very long time, decades. And um, so earlier, before the Supreme Court decision, we were up to 13.8%, kind of an aggregate tariff rate. And um, then, so right now, where he's going to be able to put a 15% rate on a lot of things, there are some exceptions. So that's why we're not like all the way at 15% just exactly for right now. That's right now we're at this 12.1% number. And then when the 150-day, um, down at the bottom of that here, when the 150-day temporary allowance that the law allows. When that expires, it would theoretically go down to 6.7%. Treasury Secretary Scott Bessent, maybe pronouncing that wrong, but the Treasury Secretary said that he fully expects other laws to allow them to get things back up. I think that will require public notice and comment on proposed regulations, and various industry groups will get a chance to lobby. And so I don't really share his optimism, or if you want to call it that, that that the numbers will come back all the way up, because when the president was able to just do this unilaterally, he didn't have to. He had all the power over industry groups, and now industry groups can say, "Hey, you know what? If you carve out an exception for us, then we're more likely to support your side in the midterms. But if you don't, maybe we'll find, some other candidates." So the political power behind the tariffs is significantly diminished.
I want to note that we've started a new video series, and our first video, which should be coming out either later tonight or sometime tomorrow, is specifically on the Supreme Court ruling about the tariffs being illegal, or at least parts of Trump's tariffs not being legal. So if you want 20 more minutes of us talking about that and the impacts and various analysis around it, look out for that. It'll be coming out soon. Um, we're also going to talk about it slightly on the next slide here, but again, full video that will be on our YouTube channel, and we'll probably send it out on our newsletter if you follow our email newsletter.
All right, so I get the next slide again. All right, so IBM stock falls on fears of AI taking away investment in other tech stocks. Yeah, over the last 3 months, IBM's gone down 20.6%. And this was a big part of this was that Anthropic, who owns Claude, is the kind of retail name of their AI tool. Excuse me. Claude is learning to code in COBOL, which is the old mainframe operating system. When Y2K fears were around, it was because all the COBOL code just abbreviated the year number with two digits. And so everybody was worried that when 2000 came, the computers would all think it was 1900. But anyway, excuse me. Um, so COBOL is just an example of how AI is really has the potential to take over so many other parts of the tech industry. And IBM has their own AI, Watson, and they've been interested in having Watson be uh, queued into voice commands and not just text for a long time. So at some point, they will have to adapt as best they can. But I feel like this is kind of a canary in the coal mine for some other software and tech companies.
We saw a huge sell-off over the past month or two, which was due to, at least the market commentary is attributed it to fears around AI replacing these software companies. If you can go to AI and just say, "Hey, I could pay for this expensive software as a service license for the software that I use every day, or I can just ask AI to do it for me."
Hmm.
Well, a lot of those companies would become worthless if everyone canceled their subscriptions. So there was a big sell off, which is one of the reasons why we saw those mega cap large tech names underperform year to date. And then some replacement into some smaller cap and industrial names and such, the more traditional, manufacturing and such. So, because that's a little bit harder, at least in the current state of AI, to be replaced, rather than software might be very easy for AI to replace. So that's at least the fears behind it all right now.
Yeah, we have a CRM system, customer records management um, system in our business, and I saw somebody on YouTube saying how, oh, they had um, ChatGPT or Gemini or somebody build a CRM for them, and it just, took took some few minutes. Um, I don't know that it would really uh, be as customized, but I think, over time, theoretically, maybe we could replace ours by something we build within one of our AI tools. Um, so next up, we have Netflix ditching their deal for Warner Brothers. So basically, Paramount it upped their offer to $31 a share. They gave the Warner Brothers board of directors gave Netflix some time to decide if they wanted to sweeten their deal, and Netflix decided, no thanks. We'll just take the $2.8 billion fee that Warner Brothers would have to owe them because Warner and Netflix actually had a signed deal contract before the hostile takeover from Paramount came in. Interestingly, Netflix stock went up a little over 7%, as did Paramount. Warner Brothers Discovery went down about 2% on the news. And so, it's a continuing saga. I personally am most interested in the fact that CNN is part of Warner Brothers Discovery, and so that will be another major news source controlled by a billionaire. Um, Probably not good for the diversity of opinion on cable news, but um, we'll see. I think that we're gonna maybe AI will allow people to customize their feed more, and people will become less and less dependent on gatekeepers within CNN or other similar organizations.
That's a scary thought, though. Customizing your feeds, we kind of saw that with Facebook and YouTube and the other algorithms. And what we found over long periods of time is people get into echo chambers and they only hear their own, like confirming their current beliefs. So
Mhm.
that might not be a rosy future, and hopefully we don't actually see that. But maybe.
Right, but those algorithms were hidden. I mean, supposedly you can go into Instagram and like see your algorithm and tweak it a little bit. But if you had an AI agent that could, you know, maybe I could build an AI agent that for somebody that just says, I want to neutral both sides of the argument feed for every issue. I don't know.
That would be great. I feel like most people wouldn't do that, but that'd be great.
Well, you don't have to sell to 100% of your potential audience to still have a good product. So if anybody out there wants to take that on,
I
I'd
think
be
there's
happy to
a
test it.
company, Ground News, if you heard of that before, where
Yes.
they do similar thing to that, where they try to curate. Um,
Yeah, I haven't tried that. I've thought about it, but yeah, interesting concept. So the last thing here, we referred to it tangentially, the Supreme on the chart of the week, chart of the month rather, that we had closer to the top of the show. The Supreme Court ruled that Trump's sweeping emergency tariffs are illegal. Um, it was a 6-3 decision. Um, so you had the three democratically appointed uh, justices who were appointed by Biden and Obama, respectively. And then siding with them were uh, Kavanaugh, Roberts, and I'm sorry, not Kavanaugh, Amy Coney Barrett, Chief Justice John Roberts, and Neil Gorsuch. Gorsuch is um, just his concurring opinion, which is what you call it when somebody agrees with the finding but disagrees a little bit with the reasoning. Um, was really interesting to me because he criticized both Roberts's um, main opinion. The Chief Justice John Roberts chooses who writes the opinions of his side always, and so he chose to write that one. And then one of the liberals, I believe it was Sotomayor, also wrote a concurring opinion. But Gorsuch criticized the dissenters and the people that he agreed with, and kind of just said that, the whole point of the Constitution was to um, not allow concentration of one person being able to unilaterally decide things, especially things that are normally the purview of another branch of government. And making tariffs um, is a tax, and so that's part of what the Congress is supposed to set those rates. So, um, very interesting from a constitutional perspective, um, and encouraging that we know that there is a line. Early on in the Trump administration, we weren't sure, is there a line where this court will put the brakes on something that the current administration is doing? And we know now that there definitely are some lines.
The line is pocketbooks, since is the taxes. We'll have to see what other decisions that come out. There are still high profile decisions to be had. There will always will be, but we'll see what other news comes out of the Supreme Court, and we will cover it here if it's finance related. That'd be great.
Hmm.
All right. So three more news items. Try to keep it a little bit shorter this month, even though a lot happened. Trying to not have 2-hour webinars for our listeners here. So a nice quick one. India's economy grew at 7.8% last quarter, and 7.8% was its real GDP growth. I think its nominal growth was 11 or something percent. It's very, it's quite impressive, honestly. I've been a big fan of India's economy for a long time. Those that speak to me about investing in finance and such, I often bring it up, and we have client portfolios specifically hold India as the main emerging market that we prefer. Of course, there are a number of emerging markets that are also attractive, and there's a number of emerging markets that I wouldn't want to touch with a quite long pole. But it has a very interesting combination of moving parts and contributing factors where I often attribute it or compare it to like China 20 years ago or 30 years ago, where just how its demographics look and how it's growing very quickly and a lot of the input factors. So, big fan of India, and its surprise high GDP growth was just something I wanted to share with our listeners. All right, the second news item. Yeah, go ahead. Oh, Gordon, you're muted. You're muted, Gordon.
I just wanted to mention I'm always impressed by how many engineers India and China graduate. India has 1 million new engineering graduates per year. Um, to put that into perspective, Purdue University's main campus awards the most engineering degrees of any school in the US, 3,827 in 2023. Um, Now, I would I would say that the average Purdue engineering graduate is far superior to the average graduate in India or China, but still, um, that's a lot of engineers, and you know, that's the growth engine.
And that's another big one is just the population, one of the reasons why they're able to graduate so much. And one of the big differences between like India versus China, or even Japan as or as a different example, is Japan and China's populations are just much older. India's average population, I don't have the statistic off the top of my head, but it's quite young, which is why
Yes.
there's so many of these people that are graduating now and have a long runway ahead of them. So yeah, very interesting economy and a strong investment for those that are looking for emerging markets or international exposure and have a long time horizon. All right, so getting into our second news item here, Pakistan and versus Afghanistan. So this actually happened on February 27th, which I think was the day before the Israel and U.S. strikes against Iran. So it kind of just got covered over in the news headlines. There was one day, and they were like that it came up, and we saw that this war between Pakistan and Afghanistan occur, and then it just kind of just became, oh well, that's just another war in the Middle East. That's not a newsworthy event anymore, even though it's quite a newsworthy event in my opinion. What happened, according to various sources that I had prepped was that the Taliban, who controls Afghanistan currently, um, uh, bombed various portions of Pakistan, and then in retaliation, Pakistan declared open war and started bombing Afghanistan cities. I believe, Gordon, if you have other insights, I believe Pakistan is both much more populous and has a much higher uh, GDP and a much higher advanced economy. It also has nuclear weapons, but I don't think it would get to that point. But it's definitely a very interesting conflict, and we'll see how that contributes to the already quite destabilized Middle East, and if that impacts oil or other, it could spill over to, does Pakistan want a second war with India, or or there's plenty of that could happen.
Yeah, Afghanistan is where land wars in Asia go to die because it's just it's impassable, so much of it. Um, you know, in war games, being in the mountains is always like, wow, your ability to defend yourself goes way up. And Afghanistan is just all very, very difficult mountains.
Yeah, I don't think. Uh, I honestly don't know the rationale behind the war. I guess a lot of wars don't have that much rationale behind them. But for Pakistan, I doubt it's a conquest. And for I don't think either of them are trying to conquer the other. And the terrain, of course, makes it quite difficult to hold anything. I think it's mostly let's blow each other up for some kicks, and we'll see if that causes lots of other problems. And of
Mhm.
course, the real victims are civilians. There were plenty of civilian casualties, and I'm sure since the articles that I referenced were written, there have been more. So it's very disappointing. All right. Well, the big news headline, which we actually again going back to our new video series, which is going to start being released this week and continue ideally weekly from now on, is the U.S., Israel, and Iran war, if we can call it. I think technically there hasn't been declaration of war uh, through the U.S. Congress, but that's never stopped us before. So. those that want to learn more about our thoughts on this, we have a 10 to 20-minute video on this, which again coming out probably next week. But the quick and easy on it is February 28th, which I think was either Friday or Saturday. Do you remember if that must have been
I don't recall.
the
It's a
28th
blur.
was the Saturday. So Saturday, the U.S. and Israeli forces launched coordinated strikes on various parts of Iran, but the most impactful, important of them was targeting the supreme leader Khamenei, which
Khomeini?
Khomeini, which he was in his 80s, had control of Iran for 30 years or something, and he was at a meeting, not in a bunker, above ground with a dozen other high-ranking military leaders. I forget the exact statistic, and I'm sure it's changing quite a bit, but day to day, I think 40 of the top 50 Iranian leaders were all blown up over the past 3 or 4 days. So it's been quite a regime change. We'll see if the regime change actually sticks or not, and if this just fragments the country into warlords, or if this is going to break them and they'll come to a negotiating table, or if it's just going to make the resolve that much greater and have more justification to hate America and Israel and the other their long laundry list of enemies. They sent out in response bombs to, it seemed like every one of their neighbors. It was seemed very indiscriminate, where they bombed Bahrain and Qatar and the UAE, Saudi Arabia, lots of military bases of the US, any ship that was going through the Strait of Hormuz. I think Cyprus or something had a single drone go to there for because there's a military base.
Mm.
There was quite a bit of retaliation. I think six so far. The last time I saw it, U.S. military service men and women have perished in the past 4 days. That doesn't even count the number of civilians, and I'm sure plenty of other service members from all the other countries that I had just mentioned. Um, of course, as I mentioned last, for Pakistan, the real impact is the innocent civilians. Iran state media reported at least 100 deaths, including a strike on a girls' school, prompting nationwide protests, which, of course, is not a good target to hit, a girls' school. And um, it's definitely sad to see this war just killing innocents left and right. Um, there's plenty of financial impact beyond the human tragedy. There's going to be likely higher oil prices, likely higher inflation due to those two or likely facts, projections, we'll say. Likely we'll see fewer rate cuts. Likely that will have negative impacts on U.S. stock markets. Will likely have impacts on the uh, American elections later on this year. Um, we're going to see supply chain disruptions, especially with oil going to India, China, South Korea, and Japan, which are the biggest oil purchasers from producers that ship their oil through the Strait of Hormuz. And we got my cat Citrus coming to join us. Hello. And yeah, what are your thoughts, Gordon? I'm sure there are many, and there are plenty of impacts that we could analyze for a 10, 15, 20-minute video, which again is coming out soon.
Yeah, I think that all this is expensive, and so it'll increase the deficit. And defense stocks will be winners probably in the short to medium term. But it's interesting. The thing that struck me when I was listening to your overview was about the question of is it a war? We targeted a foreign head of state. Um,
Again,
hasn't, well, we kidnapped
we kidnapped one, yes.
one before, and now we killed one. That's really, we've had other conflicts. Um, I guess the war in Iraq, we wanted to, I mean, that had a specific purpose, a declared purpose of getting Saddam Hussein out. Um, Afghanistan, we never, uh, you know, targeted a head of state that way, although
Was there a head of
the
state there?
Taliban, yeah, so that's a little trickier with when it's the Taliban. Um, it's a big escalation. I am confident that most of the rest of the world views this as a war initiated by the US.
One analyst that I found, I listened to quite a lot of analysis around the this conflict war, or whatever you want to label it as,
Mhm.
over the past few days in preparation for the webinar and our video, and just keeping up to date for our clients. And the most intriguing one that came up to me, which wasn't immediately evident to me, but after it was said, I was like, oh yeah, that makes sense. I don't know if it's a coordinated geopolitical strategy that the Trump administration has, but 17% of oil that China consumes, that it imports, comes from either Iran or Venezuela. And of course, those are the two places that Trump has decapitated the head of state and tried to prevent oil from leaving and having more control. Now, China, of course, being more open to purchasing oil and other natural resources from more problematic regimes, such as the one in Venezuela and such as the one in Iran. So the analyst was pointing out maybe this is more of a less so about Iran and less so about the nuclear capabilities that they likely don't have because they were destroyed last summer, and more about squeezing China before Trump's visit later this month. Again, that's some 3D chess that is very impressive if that is the actual end goal. I thought it was a very interesting analysis. I don't know if it's true or not.
Yeah, it's interesting. And you have to wonder, well, who stands to benefit if China can't get oil from there? And it seems like the answer is the Saudis and the non-Persian uh, oil producers in the region,
Well, Russia too,
as well as,
probably.
yeah,
Maybe the US, because it depends how much we export to China. Saudi Arabia might be harder though, because they ship the majority through the Strait of Hormuz. I don't know if it does seem that Trump wants the strait to be open, but it could, they are definitely impacted. All of that entire region is impacted.
yeah. I think the thinking is that eventually the strait will reopen, but Iran won't be um, won't be the ones using it.
Yeah.
But as always, we'll see.
Yeah. We're following it closely. And again, fourth or fifth plug, go watch our new video that's coming out soon if you want to learn more. We're trying to add more content, more education, more analysis for our clients and those that follow Silverstone. All
Mhm.
right. Well, I didn't see any questions come in live. There were some questions that came in from webinar attendees that registered beforehand, but I included those. I wrapped them into the presentation, so those should have been answered throughout. So I guess that will wrap up today's webinar. Record 45 minutes, I think, is one of our shorter ones. And we will see you hopefully next month with hopefully some better news and less conflict and less potential inflation and more uh, just peace and prosperity, ideally.
And definitely my cold will be better by then.
Oh, yes.
And I may even be glasses free, getting my eyes fixed. So we'll see.
Well,
Better.
a lot to look forward to. All right. Well, we'll see you all next month. Bye bye.
Bye bye.